Hello traders and welcome to a new day trading strategy video of mine. In today's video we'll be talking about the volume profile, and this is my fourth video that I'm going to be doing on volume profile. So the reason I'm doing this video again is because it was the most voted upon Patreon video that I had. I put this one up a few times the past few weeks and it really got not many votes, but now we finally have a few more votes than usual. So yeah, we're going to be talking about how to use a volume profile. I labeled this volume profile expert, but the topics in here are not going to be any more complicated than the topics I worked in beginner and the topics I worked into advanced. This is just going to be an expansion upon how you can use the volume profile in a few different ways. So what did we talk about before? In the beginner video that I did on volume profile, we talked about LVNs, HVNs, and support and resistance coming from HVNs, and also how consolidation and uptrends and downtrends react to high points of volume. Then in the advanced video, I talked about clearance, which is when price approaches an area of LVNs and typically quickly tears through that area of LVNs. And now in today's video, we're going to be talking about stop losses, Confluence, and other ways that you can use a volume profile to make it even simpler. Because I know that the bulky volume profile could sometimes be a little large and obscure price. Okay, so to start off with our first strategy, stop loss placement. So one method, and the main method that I use volume profile with is stop loss placement. You can find areas of high volume and then just put your stop loss a little bit beyond that area. So as I put here, the stop loss should be placed here because price will have a hard time bypassing the HVN. And if price does go through an HVN, it will typically go much lower or higher, depending on where the HVN is and depending on where price approaches it from. If you short and there's an HVN above price, you'd want to put your stop loss above that. If you buy something, you are going to want to put your stop loss below an HVN level. So here are a few examples that I have compiled. We do have sentiment added here as well, and the visible range volume profile on Tradingview. So my first question here is, where would it be a good place to place your stop loss? There are probably a lot of good answers to this, but I do know what happens here because I prepared this, and there is a right answer here. And I would focus on where the drop-off of HVNs occurs. So I'm going to give you guys 5 seconds to try to find a price to place your stop loss if you had bought in this market. Okay, so actually the best place to put your stop loss would be a little bit beyond this HVN area right here. I know some of you might have said a little bit beyond the value area, but there is still a lot of HVNs of high volume nodes around that area, so typically the best place would be to put a little bit beyond the HVN. Why? Well, if price goes past all of these HVNs and then bypasses the last HVN, it's probably going to tear right through all these LVNs. So with that reasoning, we probably want to put it at the very, very beginning of that LVN area and the very, very end of the HVN area to protect. And one more thing, we can see that the developing point of control. So this is just going to be the point of control that fluctuates over time. It was here, as you can see from all of this time, the point of control was here with the highest volume. And then the volume profile changed at this point here when there suddenly was more volume at this point right there than here. And that's why it went up. But this previous point of control typically is going to act as pretty strong support. So remember these price levels here, 17 and 17,100. So price actually makes a tail down to about 17,050, which the volume profile does change here, but if you just compare it back to the point of control here, you can see that the tail actually goes right down to that point of control. I think it goes a little bit past it and then is not able to go any farther down. The reason this occurred, well, someone likely had sold here. Likely one large trader had sold a lot of BTC on Bitfinex, and when they had sold, the price had likely just torn through a lot of bids around these areas, and then there were likely a high buy order wall or a bid wall below here, where a lot of traders may have put buy orders, and that's what caused price to not go any lower. So this would have been a pretty good spot to place your stop loss. Okay, so now we have another example, except this time we're in an uptrend and not really in this kind of weak uptrend consolidation market. We have a pretty clear uptrend right here. So where do you want to place your stop loss? And remember from the previous video where I talked about the value area high and the value area low, and how in an uptrend, typically the value area high becomes future support. Then also pay attention to HVMs as well. So you want to place your stop loss as high up as possible so that you can protect yourself with amount of loss, but also low enough that it likely will not get hit unless the market changes into a downtrend. That's the whole point of placing a stop loss. So I'm going to give you guys 5 seconds to try to determine where you would put your stop loss. Okay, so it's kind of hard to see here, but the price does go down. And if you look here, price is around 627. Price does go up to 655, but it does go down to here. As you can see, this right there is this right there. Price goes up and then goes back down here and goes a little bit below the support level. So price does end up going down to about 575. So if we look at what's going on around 575, we have the value area high here. And remember, this is just where one standard deviation of volume is kept. That is the value area, which is in purple and blue. And price does go down to that value area high right here, which is also support level, and then price continues moving upward. A good place to place your stop loss would probably be a little bit below that value area high, with the reasoning that if price does go through the support and breaks through, and confidently breaks through the value area high, you might see price actually going lower to this HVN cluster that occurred right here, because a lot of people had bought and sold here, meaning that if price does come down to here, it's going to have a hard time going lower without consolidation or a retracement back upward. So I would say the best place to probably place would be around here, right below that value area high. The second best place that also would have been okay answer if you had answered it would be right beyond that large cluster of HVNs right here. So placing a stop loss here would probably be pretty good as well. And then price went higher, as I had said, with declining LVNs. Okay, so that's how you can place a stop loss just based on volume profile. And it's typically not too hard of a strategy to do. All you have to do is just identify the current market stage. You can use visible range or you can use fixed range. I prefer fixed range, but I wanted to show visible range because it's a little bit cleaner and the examples are more clear. But in my actual trading, I'm gonna use fixed range on the beginning of an uptrend if I'm buying retracement. And I'm going to identify the high of the value area, and I'm also going to identify HVNs, and I'm just going to put my stop loss right beyond those. And then typically, I'm going to be pretty protected from wild price tails or a pretty powerful retracement that could maybe hit my stop loss. Yeah. So another way that you can use the volume profile, and this time not as a solo indicator, but as an indicator to be used with other indicators, is with Confluence. And all that means is combining the volume profile with Fibonacci's. You could also combine it with sentiment, like I had said, or order flow. I recently did 2 videos on order flow if you want to check those out, and I've done 5 videos on sentiment. These will give you more of a bias, and that's why I put market bias here. And the good thing about that is that will complement well with the volume profile and Fibonacci's, because these give you price levels, these give you bias, and those two typically work pretty well together. Bias being, you see bullish sentiment and you see bullish order flow, then you're probably going to want to look for a Fibonacci retracement or extension, and then you're also going to probably want to look for a HVN to buy from as well. So yeah, let's look at what that means. So if we look at this cluster here, I drew this is a fixed volume profile from the high down to the low here, and that was the fixed range volume profile. So in the short term of these Fibonacci retracement levels, where do we see a large cluster of HVNs? Give you guys 5 seconds. And where would be a good place to sell? Yeah, so as per usual, the 61 point is typically the best place to sell. And we also have another really cool thing going on at that level. We see that we have a large cluster of HVNs here that's higher than its surrounding volume nodes around here. Yes, the 50% does have the value area low, so this could cause some resistance. That's a completely fair answer, the 50%. But I think that a slightly better answer would be the 61.8 with all of that confluence there. And one more way you can use the volume profile is, and this is another way that I actually do use the volume profile. Fibonacci's give you price levels, but we don't typically want to put our orders at direct Fibonacci levels. I mean, there's nothing wrong with that. It's just that there are better ways to pick direct price levels. And one way that you can do that is to look at the volume profile, and you could place your order right at an HVN, or a little bit beyond, a little bit below an HVN, or above an HVN if price was going down. So what you could do is see this HVN here, and then place your sell order a little bit below that. And if you had, this is what would have occurred. That tail occurs, it goes up, someone unfortunately buys, as you can see, at a not so good price, and then price rejects that and goes down. And if you notice here that the price goes a little bit past that 61.8, that probably occurred because of that single high volume node right there. A lot of volume was transacted at that level, meaning that a large order could be placed at that level, meaning that it will probably become resistance. And that's why the tail went a little bit past to that level right there. So this would have actually been, I know this is 2020 hindsight again, but it's a way to show it and teach it. This would have been a pretty good spot to put your sell order at. We have 61.8, and then we also have volume profile confluence with an HVN here, and potentially previous support becoming future resistance as well. So that triple combination is giving us a pretty good, pretty high probability that the market's going to bounce off of that level. So one more thing that you can do is draw the volume profile with your Fibonacci endpoints. So what I mean by that is I went to the 1 hour for Bitcoin here, and I drew my Fibonacci just from the low to the high, but I copied that low and the high with my fixed range volume profile. And when I did that, I noticed that the 38.2% right here, 9,500, actually was the value area high, as you can see here. The 38.2 here was the value area high for the volume profile from low to high here. And this amount of confluence on a high time frame could have shown you a pretty good spot to buy. Typically, maybe in the short term, or even to invest in Bitcoin if you're so inclined. And you can see that the market did actually go a little bit beyond that value area high, and it actually went a little bit. It approached the HVN area around here, but it wasn't really able to go any lower than that HVN area. It just kind of touched these and then went back upward, as you can see here. So that's one another way, instead of just looking at stop losses or looking at good spots to sell, you could go very long term. You could look at a daily, a 1 hour, a 4 hour, and you can try to identify by drawing the Fibonacci's in the same exact way that you draw your fixed range volume profile. You can find some pretty good spots of confluence just by looking at value area high, low, and HVNs, and also the point of control, which is that black line right there. Okay, so there is a simpler method, and I know this video is called Expert, so it's kind of ironic that I'm talking about the simpler method with this, but there is another method that you can use with volume profile that can make it a lot easier. So let me show that. So if you see here, we have the volume profile and we have consolidation. Let's just deselect the volume profile and keep these two on. And let's see what happens. Well, one thing that we see here is that price does go down and that the value area low is respected. That the blue bottom line here is a value area low. Blue high up here is the value area high. And you can see that price makes the value area high right there. And this is when price is right here. Price actually goes up to that value area high area, gets rejected once, and then twice, and then a third time here. And the reason that occurs is because there might be a lot of HVNs in this area, and also the value area high could also have just some resistance, because potentially other traders could be looking at the value area as well and be trading accordingly. And then price does break above the value area high, which typically means price is quite bullish and moving into a new trend. But then we saw that price actually moved back down and then respected that value area high as resistance. And again, the reason that this is fluctuating over time is this is just the visible range volume profile that I plotted here based on scale, but it's going to fluctuate over time as more information comes to the market. So every time that a new candlestick is printed, it's gonna fluctuate, as you can see here. So this information is actually not past information. It's what you would have seen in live trading. So like if price was here, for example, you would see that, and that held. And you could maybe put your sell order around there accordingly. Another pretty good thing that the volume profile did here, the value area low was respected, not completely respected. I do see that, but the value area low area was respected because there was a lot of volume in this area here. And as price went down, it was not able to go down much further. Then it went back up again. Here, then it went right back up to that value area high. Remember this blue value area high right here. Made resistance at the value area high again, and then just continued doing what it was doing. It still does need to be said, though, that this black dashed line, the point of control, this also is a good gauge for when the market's moving out of a certain market stage. So what I mean by that is when the market surpasses the point of control, that shows that the market's moving past a high point of volume, meaning that the market's likely to continue moving in that direction. So what I mean by that is when price comes here, starts to be respected by the value area low, and then price actually breaks above both the value area low and the point of control, right here could have been a potential buying opportunity. And one could have either targeted a jump in the point of control, remember that black dashed line, or you could have just sold at the value area high up here. But of course, you'd probably want to be using volume profile with other indicators as well. Volume profile by itself is great, but like I had said before, it works quite well with Fibonacci's, and it also works quite well with order flow and sentiment in mass market, gauging the mass market. So yeah, so that's just going to be it for this video. We've gone over 3 ways that you can use the volume profile. We've gone over how to place your stop losses based on any kind of trading that you use, whether it's MFI trading, whether it's Fibonacci trading. You can use HVNs to place your stop losses. Confluence, with what we just talked about, you can plot your Fibonacci's in the same exact way you plot your fixed volume profile, and you can look for spots of high HVNs. And then we talked about the simpler method in how to use the visible range volume profile, which just conforms to the scale of your chart. And this one will fluctuate over time. And the good thing about this one is that, again, it doesn't require too much thinking, and it doesn't clutter the chart. It just shows you 3 lines: the point of control, the value area high, value area low, and so forth. You just got to be careful on how you zoom in and how you zoom out, because here you're going to get different information, of course, than if you zoom in here. So typically you just want to zoom into the market stage that's occurring. So if the market's in consolidation, you probably don't want to show, like a downtrend here and then consolidation here. That might not give you great values like this, as you can see. A better way to do it would be to just isolate the market stage that you're in, of course. So here, this is a downtrend with minor consolidation, as you can see. So I could just zoom in here. So I just keep those the top values and the lower values here, and then I can start to see this, and then I can start to reason that that this area up here might be resistance, and so forth. And yeah, so again, you can just play around with the volume profile and see what works and see what doesn't work, and then go from there. So I hope you guys enjoy this video, and have a good day. Thanks for watching.